Let's have a look at the Scottish Widows Japanese Pension Series 3. Can you do well with it? Well, overall, let's assume these are good companies. If they're such good companies, why the hell has this fund manager put so little capital into each? Why is it not closer to 5% in the top 10 holdings? And you would have done better if you just did that simple amendment. That's point number one. Point number two, and I made this right across the board for these. Yes, Japan's done rather well. When Japan has a pullback, which it inevitably will, these funds can't hold cash. So you'd be better off holding these individually if you could, which you might say, well, I can't, Alpesh, because most of these are not listed in a vehicle which I could invest in unless I've got accounts with the Japanese Tokyo Stock Exchange. And you're absolutely right. So the fund in that regard is fine, but you need an exit. What happens if you get a year like 2022 for the broader market and you need an exit of that? The rule we teach is looking at the short and medium term moving averages, which saved us from the 25% drop the market had in 2022, and we managed to keep our gains that we'd achieved before that. If you want to learn more about investing properly and professionally and for free, have a look at my campaign for $1million.com. Have a look at the links in the bio as well to improve your pension. Thank you very much.